You're with Kat Feeney on ABC Radio Brisbane and Queensland.
Just after 10 minutes past 1. Now, if you're finding it harder to get a loan or a mortgage right now, then you're not alone. The big banks were whacked by the Financial Services Royal Commission. There's been a crackdown on investor loans, general move away from high-risk loans. And if you've applied for a loan recently, you'll know what I'm talking about. A lot more paperwork, checks for all borrowers. So how's this affected you or your friends, your family? Have you been rejected for a loan? Or have you been offered a lot less than you wanted? And just why do some people find it much harder to get a loan than others? Well, Phil McGann might be able to provide us with some answers this afternoon. He's the Director of Claritude Financial Planning here in Brisbane. And Phil, is it harder to borrow money now than it has been in the recent past?
Good afternoon, Kat. Yes, look, I would agree with that statement. It does flow back to the Royal Commission a couple of years ago. There was a lot tighter restrictions put on lending, and banks were actually forced to be a bit more responsible with the way they were doing things, so a lot more paperwork and the like. But it does go in fits and starts. You do actually have waves, and during the COVID crackdown, some of those restrictions were eased a bit to free up a bit of cash in the or lending in the economy as well. So I would probably say to you that if you're a good candidate for a loan, you can get a loan. It's just a case of there might be a few more hurdles to jump through and a bit more paperwork, but it's not as bad as it was and not as easy as it was. It's somewhere in between.
What makes you a good candidate for a loan?
Well, basically it comes down to what banks are looking for. Banks are in the business of lending money, and they are there to sort of actually provide that service and to actually make sure that it's responsible lending on their part. And so what makes you a good candidate is whether you have a good income and good collateral. That's what banks are looking for. If you can service your debt that you're taking on board from them and you have adequate collateral, maybe the property you're buying or other assets you're putting up, that sort of ticks all the boxes from their point of view. They will extend that credit out to you. That's what it's really about.
Does age come into the equation?
Look, it can, but banks cannot explicitly say you're too old to borrow this money, so they'll find other ways to a certain extent to actually do that. Now, when I say that is if you're at a certain age, they'll actually potentially reduce the actual lending amount or the time frame that they'll make you pay it back. So if you're a younger person, you might be able to borrow for a home loan at 25 or 30 years, but for an older person, it might be 15 years. And by necessity, that means that the repayments might be a bit higher than they otherwise could be. The big thing on the age, though, is really a case of what's the exit strategy. You know, you're borrowing money, you're in your 60s, you're looking to buy into a home or whatever. The bank wants to know how are you going to pay that loan back into the future? Again, they're in the business of lending money. They're not in the business of foreclosing on property. They don't want to have to do that. So they actually protect themselves by making sure that they can see how you could get out of this loan down the track. Maybe you tap into your superannuation. Maybe you're selling another property that you own, and that will allow them to actually get you over the line, so to speak. So that's really where the banks are looking for that exit clause, protecting them, but obviously protecting yourself as well.
It's part of that thinking to do with the fact that the older you are, the closer you are to the end of life, and therefore somewhat restricted in your ability to service a loan? That's a theory, but anything can happen.
Anything can happen.
You know,
so
20-year-old could get trouble really quickly.
More the case that if you're in your 20s and you're borrowing money, the banks, from their point of view, your earning capacity into the future, you've got 20 or 30 or 40 years. If you're in your 60s, you probably don't have 30 years of working life left. So what the bank is looking for is what's your serviceability. That's what it comes down to. It's collateral, what you're putting up, and what your serviceability is. So if your collateral includes potentially the option to tap into your super because you're about to retire to pay that loan down, well, that's an exit strategy the bank is involved with as well.
Okay, it's 1:15. You're on ABC Brisbane and Gold Coast. I'm Kat Feeney. Phil McGann is with you, financial planner. We're taking a look at credit, at borrowing, and if you've got a story or experience to share, if you were knocked back for a loan and you kind of puzzling as to why, or you know why and you don't think it's right or fair, I'd love to hear from you. 1300 222 612 is the phone number. That's 1300 222 612. Let's just spend a bit more time thinking about credit and why it might be tightening, Phil. As you said, there's the Royal Commission inflation, the economy? Is it just the vibe? Like, what's
not
happening
so
going
much.
forward?
I mean, as I say, it goes in waves, where the economy is the government, legislation, and trying to lean on banks to lend more money at certain periods of time. Then we actually do have a bit more activity in the economy. We've got inflation at the present time, as we've spoken about before. And what's happening is the Reserve Bank has got one shot in the locker. They literally have interest rates. They can put up official cash rates to try and curb activity. That's why, and that leads into higher servicing for loans. So if you're trying to, as a bank, lend money responsibly, but interest rates are rising, well, you've got to factor that in. And it means that some people may not be able to qualify under their current income because their income isn't rising as fast as interest rates are rising. That sort of idea. So there's a bit of that going on. The Royal Commission had an impact on responsible lending. There was a real edict saying down, banks, you need to be more responsible in how you're lending money to people. So they crunched that. COVID came along and they opened it up again. So they went out the other way. So as I say, at the moment, if you're a good candidate, you should still be able to borrow funds. But the thing is, the best thing you could do is don't go to your local branch, so to speak. You want to deal with a finance broker. You actually want to sit down with a broker who has access to all the banks out there, because everyone's a little bit different and all of the criteria is different. And one bank might say, well, I'll lend you X amount. And another bank might say, well, I'll lend you X plus 20% because of the criteria they're looking for. And that really feeds into even the paperwork. There's a lot to do as well. So you need to make sure all your ducks are lined up before you're fronting up to a bank. Deal with a broker is a lot better way to go, I feel.
Okay. I just wonder then, with regards to preparing to ask for a loan, what are some of the ducks that you need to get in a row, Phil?
You need to come prepared with all your paperwork, pay slips, rates notices, superannuation balances. You need all of that information. There's no point rocking up to a branch or a broker and sort of not having some of those things in your possession or easily accessible, because that's what the bank will be looking for when they're filling out their paperwork to say, well, what was your income last year? Have you done your tax return for last year? Have you got your pay slips of recent times? Have you got any other income coming from property or shares or whatever it may be? All those things need to come into the mix as well.
I'm just so aware of the nature of work these days, and we keep hearing about underemployment, even though employment rates on the face of it look great, low unemployment, but people maybe are underemployed or they're employed in a contract fashion.
Indeed.
So, their ability to service loan sort of cuts off at the end of the contract.
It does. And so that is taken into account by a lot more banks these days. And again, you've got to fish around and make sure you get the right ones, because the banks are in the business of lending money. And at the moment, the economy, it's not traditional, 40 hours a week and you're in a job forever. People have irregular income. People have a lot more contracting work, particularly in the IT field. A lot of your listeners are probably in that field. A lot of banks are comfortable lending in those scenarios because they can see that contract's finished, you've got another contract coming on, and they'll accommodate that. People get a lot of overtime, particularly emergency services workers, nurses and ambos and things like that. There are banks out there that will take a lot of that on board, 100% of it. Other banks will only take 80%. If you're an irregular income, casual work and the like, you need to find the right lender who is happy to lend because they can see the bigger picture. But there's not a lot of banks out there that are just back in the old traditional 40 hours a week and that's it. They can see that the economy is different and they need to accommodate, otherwise they're not in the lending business anymore. So they need to actually come to the party. And so there's a lot of banks there who do that. You just have to find the right one that suits your circumstances.
Okay. On ABC Brisbane and Gold Coast, it's about 20 minutes past 1. I'm Kat Feeney. Phil McGann is with you from Claritude Financial Planning, taking a look at getting a loan these days. What are the things you need to consider? What are some of the things the bank will ask you to do? Is it easier, harder? What effect does the idea of inflation have on your ability to get a loan? I did want to take some of your calls, though, and if you do have a comment or an insight to share, 1300 222 612 is the telephone number. That's 1300 222 612. Anthony, you're on the Gold Coast. G'day, mate. What's going on?
Listen, got a friend who went in to get a bank and they got knocked back and found out that they had a credit default. So there was an organisation, I can't think of the name of it, but there was an organisation said they could remove the credit default from their list. My question is, I didn't think they could do that. But I just wanted to get your thoughts on these organizations are doing that. Is that genuine or not?
Look, it is. It's a legitimate exercise. There's a number of companies out there that specialise in that. What you're really talking about there potentially is people who have an issue with a credit default, things like late phone payments or they had a mobile contract they forgot about or whatever it may be. You can actually go to companies and they can contact the telephone company and work it all through. It might take a number of weeks to do. So again, you need to get your ducks lined up if you're about to bid on a property or something like that. But there are legitimate companies out there who offer that service and can clear certain issues on a credit report for you in a legitimate fashion. And that makes it then look a lot better from a lender's point of view.
But not defaults or judgments, I would imagine.
No, not that sort of things. But what we're talking about is, maybe like payments of credit cards or things like that in a minor fashion, or particularly phone accounts. People forget about their mobile phone credit or whatever it may be, and so that can pop up, and it looks like you're not paying your bills, so they can address those.
Thank you very much.
Thank you, Anthony. On the Gold Coast, 1300 222 612 is the phone number if you have a comment or a question. Phil, just on the subject of your credit history, can I just find out?
Yes, you can.
How do you do that?
There are companies out there that you can apply to and actually find out what your credit history is, just to have a look and see what it is. Will it mean much to you? That's the thing. It'll say on there and you'll see, I've had some credit cards or I had a mobile phone contract or I had a loan or whatever. But it's really in the context of what you're trying to achieve. Does it mean much to you? Can you then use that to give it to your bank? Well, not really. The bank will do their own credit checks on that side. But out of an interest, it may be worthwhile. There's usually a minor charge for it, but there's a number of companies out there that'll let you do that. Interesting.
Now, we better let you go. And before I do let you go, I want to say thanks for your intel and advice on credit and explaining how it all works. Phil McGann is a financial planner with Claritude Financial Planning. And of course, this is a conversation general in nature, so please do seek out your own independent advice. I did want to say, I'm about to play the Kate Bush song Running Up That Hill, which is back in the charts at the moment because it features prominently in the latest season of the Netflix show Stranger Things, which I've never seen. You've seen it.
I've seen it. I've seen the first series, which is a few years ago now, and I watched half a dozen episodes. It's interesting. It's good.
What's it about?
Oh, look, it's a group of kids in a country, an American country town, so to speak. Okay. And I think from memory, there's an alien arrives and they hide the kid away. Interesting. A real throwback to a Steven Spielberg 90s vibe.
Well, a bit E.T. sort of
Very
feeling.
much so, very much so. And that's good for people of a certain age. Okay. Bit of a throwback to the time.
Well, there you go. Kate Bush has posted on her website. She's delighted pretty well that the song is charting again. So here it is on ABC Brisbane and Gold Coast. Phil McGann, thank you very much.
No problems.